last episode, we understood what BFSI is, India's entire money system. But there's one question we haven't answered yet. Who controls this massive system? Who makes the rules? Who keeps our money safe? And who stops things from going wrong? Because when it comes to money, one thing is very clear. Trust is everything. And trust only comes when there are strong regulators. So in today's episode, we are going to break down the 5 most important regulators in India in the simplest way possible. RBI, SEBI, IRDAI, PFRDA and NPCI. And I'll explain why NPCI is not a regulator but still acts like one in many ways. So let's begin. Before we talk about regulators, let's understand what regulator actually is. A regulator is a watchdog, a regulator makes rules, a regulator keeps companies in check, a regulator protects the common person. Think of regulator like a referee in a match. Players can run fast, score goals, play their best, but the referee makes sure nobody breaks the rule. In the same way, banks, NBFCs, stockbrokers, insurers, pension funds, all of them work under clear rules made by regulators. This is how India's financial system stays safe, stable and trustworthy. Now let's meet the biggest and the most powerful regulator, RBI, the Reserve Bank of India. It's the most important financial authority in the country. If India's financial system was a movie, RBI is the main character. So what does RBI do? It controls money in the country, how much money is printed, interest rates, inflation control. It controls the banking system, giving licenses to banks, checking if they follow rules, ensuring banks don't take dangerous risks. It controls lending. RBI creates guidelines for NBFCs, MFIs and fintech lenders. It decides how loan can be given and what can't be done. It controls the payments, UPI, IMPS, NEFT, RTGS, all under the RBI supervision. It protects the customer, your rights, your data, your money in the bank. RBI is basically the guardian of the entire BFSI system. If RBI says yes, the whole industry moves. If RBI says no, everything stops. That's the power RBI holds. Next is SEBI, the Security and Exchange Board of India. SEBI takes care of the investment world. Whenever you invest in stocks, mutual fund, ETFs, bond, PMS, research advice or IPOs, SEBI is watching over everything. What does SEBI do? Stop scams and frauds. If someone tries to pump and dump stocks, SEBI steps in, protects investors, ensures mutual fund companies, brokers, advisories follow strict rules, makes market fair so that everyone from small retail investor to big institutions play on the same field. If the investment world is a huge share market playground, SEBI is the supervisor who makes sure nobody cheats. IRDAI stands for Insurance Regulatories and Development Authority of India. This regulator manages the entire insurance world. Life insurance, health insurance, motor insurance, travel insurers, and all of it. So what does IRDA do? Make sure that company pay claims properly. You buy insurance, you should get a claim when you need it. Controls product design. Companies cannot sell confusing or unfair insurance products. Protects customers from mis-selling. No false promise, no hidden terms. Think of IRDAI as the shield protecting customers in the insurance market. PFRDA is the Pension Fund Regulatory and Development Authority. This regulator controls the pension world, especially NPS, the National Pension System. Why does this matter? Because pension is a long-term money you save for 30 to 40 years. So the regulator must make sure the money is invested safely, the system is transparent, companies do not misuse long-term savings, people have secure retirement. PFRDA ensures that the retirement money is protected and grows properly. Next is NPCI, the National Payment Corporation of India. Now NPCI is not a regulator, it is an organization created by RBI and Indian banks. But NPCI does something very important. It runs the Indian payment system. UPI, IMPS, BHIM, FASTag, RuPay, AEPS. All of these are built and managed by NPCI. So even though NPCI doesn't make rules like RBI or SEBI, it still controls how payment flows in India. If NPCI system stops working, half country cannot pay anything. So NPCI is more like an infrastructure leader that keeps India digital payments strong and stable. Let me repeat something simple. Without regulators, money cannot be trusted. Banks could fail, loan companies could cheat, insurance companies could refuse claims, stock markets could become scam, payments could crash, your money could be at risk. Regulators keep the system clean. They make rules, they stop bad players, they ensure fairness, and they protect you, the customer. This is why regulators are the foundation of BFSI world. If this series helped you understand BFSI a little better, especially if you're an aspiring product manager, make sure you hit subscribe so you don't miss what's coming next. And if there's anything you want me to explain, any concept you're stuck on, or even something that you disagree with, drop in the comments. This wraps up the two-part introduction to BFSI and its regulators. From the next episode, we'll be stepping into the real engine room of Indian finance and breaking down every major entity, starting with RBI. Thanks for watching, and I'll see you in the next one.